viewers, welcome to Simple Accounting channel. This is Uttam Sir. Today I have to discuss the non-trading concern or non-profit organization. What is non-trading concern or non-profit organization? Some of the organizations which is established for the social welfare or mutual benefit of the members of the society. That is called the non-trading concern. This type of organization don't have any profit motive objective, but the mutual benefit or the social welfare. They have to be established. So non-trading concern may be the GO government organization, non-government organization, club and society. They are the normally non-trading concern. So what you are instructed to do over here? Basically, you have to do some of the income and expenditure accounts and do the balance sheet. But non-trading concern, instead of income statement, it is said as income and expenditure accounts. And if it is the balance sheet, here it is the balance sheet is a statement of affairs instead of balance sheet, that is to be written. So whenever you are going to do the income and expenditure accounts or the balance sheet, then obviously some of the accounts you have to do one by one, step by step. Then it is easy for you to do the income and expenditure accounts and statement of affairs. What the elements you have to do from the beginning, step by step. First of all, you have to do the receipt and payment account. So here in the debit side, all the incomes or all the cash which is generated for the business, that is to be written in the debit side. And in the credit side, all the payments which is made by the organization is to be written in the credit side. And finally, you have to balance it. Balance means the balance sheet you need to be calculated. This statement is to be required for income and expenditure accounts and current assets section. So first of all, you have to do receipt and payment account. Second one, you have to do subscription accounts. Since it is the club and society accounts or non-trading concern, major income is coming from the subscription accounts. Those who are the member of the society, they have to provide some fees to this organization, which is the major income for the business. So subscription accounts, the second one. Third one, you have to be done on the bar trading account or refreshment trading accounts. What is bar trading accounts or the refreshment trading accounts? Bar trading is similar to the income statement. Since it is the non-trading concern, but some of the bar, some of the refreshment department is over there. So those are the member of the society, they have to come over here, enjoy themselves. Maybe the hard drinks or the soft drinks is to be available. Sometimes some of the food items also available over there. So this is called the bar or refreshment accounts. So if from the beginning you have to do the bar accounts or bar revenue. So that item is to find out from the problem, and from that figure you have to subtract the cost of goods sold. Cost of goods sold include the opening inventory, then purchase minus closing inventory. Then you got the cost of goods sold. This figure is to be subtracted from the revenue or sales. The figure you got, that is the gross profit. From that gross profit you have to subtract the bar related expenses. Then you got the bar profit or replacement profit. Then you have to calculate. This is the third one. In the fourth one, you have to calculate the accumulated fund. What is called the accumulated fund? Accumulated fund means opening capital. Since it is the non-trading concern, that is why it is not said as opening capital. But what is the way of determining the opening capital? The same way we have to follow here to calculate the accumulated fund. Accumulated fund means all the opening assets minus all the opening liabilities. Then you got the accumulated fund. This fund is to be required whenever you are going to do the statement of affairs or the balance sheet. Now some of the other elements you have to be clear whenever going to do the income and expenditure accounts. Maybe some of the items like this, over here you can see the board over here. This is the capital capital income and capital expenditure. What is called capital income? What is the capital expenditure? Capital income means some of the income which is generated for the organization but not for the current period, but it is the next period. Maybe the income yet to be generated but already been generated by the business. So that the capital income, maybe the legacies, maybe some of the big donations is the capital income. And what is the capital expenditure? Capital expenditure are those expenditure which is incurred by the business or spent by the business, or money is used for the business for long term period. Maybe some of the organization which requires to make a building, buy some of the land, or make some of the purchase some of the motor vehicles or equipment, computers, like that. This is the fixed type of assets. This sometimes it is called the non-current assets. So investing money into the non-current asset is said the capital expenditure. Again, revenue expenditure, maybe the revenue item or revenue expenditure and revenue income. What is revenue expenditure and revenue income? Revenue income means some of the income which is generated for the organization, revenue income. And capital income means some of the income which is generated by the business but not for the current period, for the next period of actions or next period of time. That income is to be said as capital income. It is maybe some of the income, the life membership fee, maybe the legacies, one of the capital income. So you got some of the idea: capital income, revenue income, capital expenditure and revenue expenditure. Now the revenue expenditure, this is very important part of the non-trading concern. Revenue expenditure, the expenditure which is incurred by the business for less than 1 year, that is called the revenue expenditure. So this expenditure is to go to the income and expenditure accounts. So now some of the other elements you have to be considered. Some of the item like this: accrued income. Accrued income, some of the income is still outstanding, that is called the accrued income. Here you see the subscription accounts. In the subscription accounts we have some of the income which is still outstanding. Maybe the income is pending but the members yet to be paid that income. So that income is said as accrued income. So as accrued income, one of the asset for the business. Whenever you are going to do the subscription accounts, look at the board, subscription account. Here you to write the balance BD. Balance BD means last year, previous year, the income outstanding. That is written as balance BD. Previous year due or outstanding figure is to be written. In the same time, in the right hand side or credit side, balance BD, the previous year advance. If some of the members paid their subscription in advance, then time, this is the previous year, then time, that is to be written as balance BD, but it is the advance. This is said as previous year advance. Previous year advance, this is the figure. Now you have to write the bank account. Bank account means already subscription received by the organization, that is to be written as bank account over here. Then some of the items in the subscription accounts: unrecovery or bad debt. Bad debt is the items, this is not appropriate for the non-trading concern. Trading concern we can write the bad debt. Bad debt means some of the members unable to pay the subscription. That amount is to be said as bad debt. But here the term is not appropriate because bad debt is one of the elements which is normally be used in the trading concern. Trading concern means the concern those who are established in order to make profit. That organization is to be written. But it is wise decision is that you can write the unrecovery amount, oblique the bad debts, the similar things. Now this is the balance sheet. Finally, balance sheet, you see balance sheet in the credit side as well as in the debit side. What is the meanings of this? This balance sheet means the current year outstanding or due. Here current year due, that is written in the bracket. So this is the balance sheet. End of the year, this amount is still outstanding. This is to go to the balance sheet. And again you see balance sheet in the debit side. It means some of the members given their subscription in advance. That is written as balance sheet. This is the current year advance. In the bracket it is written current year advance. So this is the subscription accounts. So when these elements is already posted in the accounts, then you have to make it balance. The balancing figure is to be written as income and expenditure accounts. In the bracket it is written B/F, it is balancing figure. So this is to be calculated. So this figure is to go to the income and expenditure accounts. So before doing the income and expenditure accounts, you have to be aware about some of the element of the non-trading concern, that is accrued income. Accrued income means the income yet to be received. Maybe subscription is one of the income, interest one of the income. So yet this income is still outstanding. That is called the accrued income. So this is to be included in the subscription accounts as well as it is go to the balance sheet. It is to be gone to the balance sheet as current assets. Income accrued. Again, prepaid income. Prepaid income mean some of the income is given by some of the members in advance. But this is not for the current year. The next year's or after next year's subscription is given in advance. This is the prepaid income. This is to be written as current liability in the balance sheet or statement of affairs. Again, prepaid income. Prepaid expense. Prepaid expense means some of the expense given in advance. That is called the prepaid expense. So this is the part of prepaid expense. If it is the prepaid, then obviously be subtracted from the concern entry, concern item. So prepaid expense is to be subtracted in the income and expenditure accounts. Again, this is to go to the balance sheet as current asset. Prepaid expense is the current asset. Accrued expense. Accrued expense, some of the expense is still outstanding. That is called the accrued expense. So this figure is to be added in the income and expenditure accounts, and it is to go to the balance sheet as current liability. One of the major item in the non-trading concern, that is the life members fees. Life members fees. What is life member fees or subscription? Life members fees may be sometimes some of the some of the organization, those who are introduce some of the life membership fees, life membership subscription. It means maybe the 10 years or 20 years life membership fees. It normally charge the subscription fees as little as possible, but the total amount is to be received at a time. Maybe this is the 2020. Some of the subscription life member subscription is going to be introduced. Maybe the 10 years life membership subscription is introduced. Maybe some of the members is interested. So maybe the 10 year subscription is given at a time, or current year 2020. That the big figure. Sometimes some of the organization, they are suffering from the liquid money problem. Then time they can use the life membership fees, life membership subscription, like that. So immediately some big money is to be generated for the business. So this is the life membership fees. Whenever you are going to treat the life membership fees properly, then you have to consider the capital income and the revenue income. What is the capital income? Maybe the 10 years life membership money is already received, but this is not the single year's money, but 10 years money. So here the two part, one is the capital income, another is the revenue income. Maybe a 10 year subscription is received as a life membership fees or life membership subscription. So you have to divide by 10 years. The total amount is to be divided by 10 years. The figure you got, that figure is to be said as revenue income. And the rest of the 9 year, maybe the 10 year subscription you received divided by 10, got some 1 year subscription. That 1 year subscription is to be written as a revenue income. Again, the 9 year subscription is still, that is to be written as a capital income. So this is to go to the balance sheet. The 9 year, this income already received, but not for the current year. It is for the rest of the years. So that's why 9th year's income is to be written as capital income. So that is to go to the balance sheet. So this is the figure, the life memberships. Right now, I am going to do the income and expenditure account. Income and expenditure account going to do. But before going to do that, some of the element over here, that is the receipt and payment account. Receipt and payment means all the receipt is to be written in the debit side, or all the income is to be written in the debit side. Money or cash inflow in the business, all in the debit side. But before that, first item is the balance BD. Maybe some of the money is already in the company's bank accounts or the cash in hand. So that figure is to be written as balance BD. Then balance BD can be written over the right hand side. This is the bank overdraft. If the company could have some bank overdraft, that is to be written as balance BD first of all, and top of the any item written. Then in the all payments, you look over here, all payments. All payments means from the money which is generated to the business, from that money some of the payment is to be done. So all the payments is to be written over here. I am right over here in on elements, but it is all the expenditure. Whatever the capital expenditure or revenue expenditure, all expenditure is to be written in the credit side. It is the balance of all payments. So then you have to make the balance of it. If the debit side is the bigger one, the balance sheet is to be written in the credit side. As this is the cash at bank. This is the balance sheet. Balance sheet, it is the balancing figure. And if the credit side is the greater one, then balance sheet is to be written in the debit side. That is the bank overdraft. You have to remember that. Now, bar trading account or refreshment trading account over here. First of all, you have to write balance. This is the sales or revenue. From the problem, you have to find the sales or revenue of the bar or refreshment account. That is to be written over here. Again, you have to subtract the less cost of goods sold, cost of opening inventory. But whenever I wrote the purchase, then some of the figure bank plus closing inventory minus closing trade payable minus opening trade payable. So whenever you are going to write the purchase, the total purchase amount is to be right. Then you have to see some of the bank account, the income and expenditure accounts. Here it written some of the purchase, written purchase or paid to supplier like this. That is to be written in the receipt and payment accounts. From that receipt and payment account, purchase or paid to the supplier is written over there. That figure is said as bank in the bracket. It is written as bank. From that bank, you have to add up the closing trade payable or creditors. Closing creditors and opening capital is to be given. So closing creditors is to be written with the bank and minus opening creditors. This is the OPP, opening creditors or opening trade payable. So that is to be subtracted. Then the figure, accumulated figure is to be said as purchase. So this purchase is to be added up with the opening inventory, the figure, and that is to be subtracted the closing inventory. The figure you got, there is the cost of goods sold. So cost of goods sold is to be separated from the sales or revenue. Figure you got, that is the gross profit. That is the gross profit. GP for gross profit. That the figure is over here, gross profit. And from that gross profit, you have to subtract the bar staff. Maybe some of the replacement department or the bar department, there are some of the staff or the waiters give you the service. So that figure, the bar staff wages or other bar expenses is to be written over here. From the gross profit, that is to be subtracted. The figure you got, that is the profit from the bar or replacement. That is to go to the income and expenditure accounts. Right now, we have to do the income and expenditure accounts. Here you look, this is the income and expenditure accounts. First of all, we have to write the incomes. This is the vertically be written. This element, this income and expenditure, similar to the income statement of trading concern or trading organization. So first of all, you to write the incomes. In the income, what the element is to be written? First of all, subscription. This subscription coming from this subscription accounts here, the income and expenditure account. This figure is to come over here, the subscription account. Then entrance fee. Entrance fee, maybe some of the new members is coming into the club. So that person is to give the big element, big amount to the club. So that is called the entrance fee. Maybe entrance fees you are given some of the instruction in the practical problem or the question paper. Maybe the 50% income is to be revenue and the rest of the income is to be capitalized. Sometimes it is to be said like this. But the instruction given in the adjustment, you have to follow that. So entrance fee, sometimes it is written as a capital expenditure or revenue, capital income or the revenue income. As it is directed in the adjustment or additional information, you have to follow that. Again, the bar profit. Bar profit is coming from the bar replacement trading account. That is the bar profit. Here the figure, the bar profit. That is written from that bar profit. Donations. Since it is the some of the club or society accounts, sometimes some of the rich people or the businessman can give some of the donation to the club. So this is the donation. But in respect of donation, sometimes it is to be capitalized or it is to be revenue item. So some of the instruction is to be given to the practical problem or the question paper. You have to follow that. Tournament fees. Maybe sometimes the club, there's some of the competition is organized by the organization. So here the tournament fees received. Maybe those who are participating over the competition, they are providing some of the money. That is the tournament fees. Maybe the dramatic is sometimes some of the club, there is the hall and they are renting that. So some of the income is generating from the hall room. That is the drama ticket. Maybe some of the drama is staging over there. So that income is to be written as drama ticket sale. Now the interest income. Sometimes some of the liquid money is available to the business. Some of the organization, that money is invested into the bank. Maybe some of the interest is given by the bank. Is said as the interest income. Then the profit on sale of fixed asset. Maybe sometimes some of the asset which is sold by the organization but making some of the profit. Maybe the some of the asset, maybe some of the car is sold by the business. The car net asset value that was or net book value that was the 500,000, but it is sold 600,000. So difference figure 500,000 minus 600,000, that's 100,000 is making profit by selling that old car. So this is to be profit on sale of fixed asset, that is to be written. More or less this item is to come as incomes. So all together that is to be added up. The figure is to be written in the extreme outer column. Then from that figure you to subtract all the expenses. Basically normal expense which is normally being incurred by some of the organization, that is like this: salary given, some of the stuff like this, maybe the rent is to be paid, maybe the insurance, maybe the club or the other hall room, so some of the insurance is to be made. So the repairs, maybe this is the maintenance expenses like this, that is to be repairs. Tournament expenses, maybe whenever some competition is going to be organized, some of the expenses over there, that is to be written tournament expense. Maybe the depreciation, some of the fixed asset is or the non-current asset is available to the organization. That asset need to be need to make some of the depreciation. So this is the depreciation is on the using cost of fixed asset is to be said as depreciation. So this depreciation is to be calculated. Maybe depreciation on plant and machineries, maybe depreciation for the office car, or depreciation maybe for the for the equipment, furniture and fixtures like this. So depreciation, the charity given. Sometimes some of the casualties taking place in the countries, and then maybe the earthquake or some of the natural calamities is hitting the country. Or this time maybe earthquake is over there. So sometimes some club is going over there to donate something. This is the charity given like this. Maybe the prizes given. Prizes means maybe the tournament which is organized by the club or the societies. Then prizes to be given. The prize expenses. The other expense, usual expense, if it is in the over there, that expense is to be written. So all expenses to be add up. The total figure is to be written under the incomes. The figure need to be subtracted. The figure you got after subtracting this figure you got, that is the surplus or deficit. If it is the trading concern, it is to be written as net profit, but we can write net profit because it is the non-trading concern. That's why this to be written. If it is the profit, maybe the income item is greater than the expense item. The figure you got, that is the surplus. So since it is the non-trading concern, that's why it is to be written as surplus, not net profit. But sometimes some of the expenditure item is more than the income item. Maybe it is to be said deficit. Maybe sometimes in the trading concern it is still said net loss. So net loss is to be written as deficit over here. This is to go to the balance sheet. So this is all. So this item is normally coming from the receipt and payment item. All the receipts here, some of the income item is to be given, and expenditure, all the payments here, the expenditure item is available over there. From that all payments, some of the item is coming over here. This is the expenditure accounts is to be written. But whenever all those items to be written, sometimes you have to be closely follow the additional information. Maybe sometimes some of the expenditure is outstanding, some of the expenditure is given prepaid like this. Some of the income item is received in advance. Some income items is still outstanding like this. So this is to be adjusted accordingly. If it is the prepaid, that is to be subtracted. If it is the outstanding, that is to be add up that particular expense. And it is income item, if some of the income item is still outstanding, that is to be add up. If some of the income item is given in advance, that is to be subtracted. This is the normal principles for doing the income and expenditure accounts. By finishing this income and expenditure accounts, we have to do the balance sheet. Balance sheet as simple as the other organization. Maybe the first of all you have to write the non-current asset, and you have to subtract the depreciation accordingly. Then you got the total non-current asset, cost minus depreciation. Then you got the net book value of that particular asset. So all the particular assets is to be written and summarize of the figure. The figure you got right over there. Then you have to write the current assets. Maybe the current asset is sometimes is different than the trading concern. Most of the cases we have the inventory. Obviously the closing inventory is to come in the first of all in the current assets. Second on trade receivable. Most of the cases trade receivable is not available, but other receivable is available over there. Other receivable, maybe the subscription in area or subscription not yet received by the business. Subscription area or outstanding, that figure is to be written. Maybe some of the other items, which is expenses item paid in advance, expenses item paid in advance, that also be written over here. And the cash or cash at bank, that figure is also be written in the current assets. So non-current asset plus current asset, the total figure is to be add up. The figure you got, that is the total assets, and from that total assets then you have to write the accumulated fund and the other liabilities. So whenever you are going to write that accumulated fund opening capital, it is to be written in the trading concern opening capital, but here the accumulated fund means the opening capital, similar to that one. So that accumulated fund is to be written, which is calculated over here. Accumulated fund opening assets minus opening liability, then you got the accumulated fund. That accumulated fund is to be add up by the if surplus in income expenditure accounts, that amount is to be add up. Accumulated fund plus surplus of income and expenditure accounts. If that the deficit over there, that is to be subtracted from the accumulated fund. The figure you written over there in the balance sheet. And maybe sometimes some of the non-current liability, like the bank loan taken from the some of the financial institution, if it is over there, that is to be written in the balance sheet in the equities and liabilities section. Equities, you couldn't write the equities, but here write the accumulated fund and the liabilities like this. So over there, that is to be written. And finally, you to write the current liabilities account. Current liabilities, maybe the trade payable is one of the current liability, maybe the bank overdraft, maybe whenever do the receipt and payment account, some of the items which is balance CD, there is the bank overdraft, closing bank overdraft, that is also be written in the current liability. Again, some of the item you have to be written over here, that is income in advance, maybe the subscription in advance, that is to be written over there. And sometimes some of the expenses item accrued, that item also be written over there. Some of the item I have skipped, that the legacies, one of the elements, maybe life membership fees, life membership subscription, which is calculated over here, the life membership fees, the 9 years life membership fees is to be written over there as a capital income, it has to be written. So then the accumulated fund plus surplus, the figure is written over there. Then legacies or the life membership fees or bank loan, that is also be written. And finally current liability also be written. The total figure that is to be add up, the figure you got, that figure must be equal to the total assets which is written in the balance sheet. So if the total assets and the total liability is equal, then we can consider this is the right one. So this is the non-trading concern, and what you have to do, that is discussed. So maybe you have to listen this video repeated time, then you can have the clear idea about that. But what I have already said, that you have to follow step by step. So there here, that's all for today. If the video is enjoyable to you, please make a like and subscribe my channel. Next video must be, it is the single entry system. You are requested to watch that. That's all for today. Have a nice time. Goodbye.